David, it is good to see you. And the one thing I keep hearing people say, and understandably, is that the Fed is out of bullets here. Are they or aren't they?
I would say they're almost out of bullets. Remember, there were a couple of things they did during the crisis that they have not yet done. One is something called the Term Asset Lending Facility, or TALF. And what that was they took asset-backed securities that were used to basically back consumer loans. That's something they could do again. They'll probably need some more capital from the Treasury to do that. And of course, they haven't put capital into the banks, but the banks don't appear to need it, and they don't have any money for that. So I would say they're almost out of bullets. It's why it's so important and so useful that the White House and the Congress are talking about a big fiscal stimulus.
Right. And Sri Kumar just made an interesting point. I don't know if you caught it, but he said he liked all the liquidity measures the Fed was taking, but thought it would have been better if they left rates up at 1 or 2% for the sake of the borrowers who depend on that kind of income. You know, low income, he said, some of the older populations. Could there be a case for that?
Look, it's always true that there are winners and losers when the Fed cuts interest rates. That's not unique to the crisis. It's bad for savers, good for borrowers. I don't think it makes any sense, though. At this time, the Fed is the first responder. They had to do everything they could. The benefits of cutting rates to borrowers, people who have adjustable rate loans and stuff like that, seem to me far exceed the costs. Plus, I think it was, despite the market's immediate reaction, a real confidence boost that the Fed was on top of things. I think also when the Fed knows that when rates are so close to zero, it's important to move big and move soon rather than to wait. So I disagree with Sri Kumar.
Well, and to your point about them being the first responder, something that I wonder is once you have the fiscal piece of this coming into place, which may include direct checks and the host of other measures we've heard today, would the Fed start to unwind some of this? Because this is a very different downturn from the Great Recession, when that was followed by a long period of financial repression, so to speak. If we have a sharp downturn and a sharp recovery, that could be a challenge for them as well to unwind some of this, right?
I think we should be so lucky that that's the problem.
Yeah.
I mean, it's very easy to turn off these facilities like the commercial paper funding facility, and they've pretty much said they're not going to raise rates for a long time until the economy's healthy again. I think that the risks of moving too prematurely to cut off support will exceed the benefits, and I expect them to be very patient. If we're really lucky and this thing is shorter than we expect and inflation goes above their target, well, that's an easy problem to deal with. That's not the one I'm worrying about right now.
Yeah, absolutely.